Good morning, everyone. This is Danny Gould with the Gould team selling Silicon Valley. Welcome to another Silicon Valley market snapshot, the second week of December here in 2019. The year is wrapping up. Everyone has 2020 vision, but I want to stay focused on what's happening today because a lot of what's going on in today's market is going to impact what the next 30, 60, 90 days look like here in the Silicon Valley real estate space. And if you watched my video last week, you'll know that things were trending very positively for sellers, and I may have spoken too soon. Now, pendings are still outpacing active inventory at this point in the single family sector. So that's the good news. The not so good news for home sellers is that it's only outpacing by 1 unit. In other words, demand and supply are fairly equal at this point. And so we don't know where that trend's gonna go. We don't know if that's going to, if that number is gonna flip-flop again and then pendings are going to, or supply is gonna outweigh demand. Who knows what's gonna happen at this point? But what we do know is that if you're in the ecosystem, like all real estate agents are, and we're out there every single day experiencing experiencing everything in real time. What I've noticed just by being in the space now is that over the last 30 days or so, there's been this surge, if you will, of newfound, I don't know how to explain it, but the demand has kind of resurfaced, if you will. And I am experiencing that, right? You're seeing it out there. There's more buyers out there right now looking at homes than there typically are at this time of year. At our open houses right now, we're getting anywhere from 8 to a dozen guests in the Cambrian area. And in the Communications Hill area, about 6 to 8 guests. Typically at this time of year, if you in one weekend get about 10 in those areas, right? If you get about 10, so like 5 each day, you're doing really well. We're far outpacing that at this point. So we use open house statistics here at the office to gauge buyer activity level week over week. And that typically reflects in pendings about 30 days after that. So because 15 to 30 days after that, right? Because pendings, that's data that is almost instantaneous, if you will. But a home takes a certain amount of time to go from active to pending stage because typically there's contingent stage in the middle. Pendings do not measure active contingent properties. So these are properties where all contingencies have been removed. And the pending listings right now, if you look, and we have this data right here, 703 pending units in the single family sector compared to 702. So last week we had a fairly, we had 50 or so units. This week we have 1. So does that trend continue in the directionality for buyers, or do we see pendings start to climb again, or do we see actives start to fall dramatically like we're accustomed to seeing at this point, and pendings stay strong? My guess, just based on what I'm seeing, and of course this could change, but what we're seeing in the marketplace right now is that I expect pendings to actually hold stronger than they have throughout the holiday season, stronger than what they have compared to previous years throughout this holiday season. And I think that's going to play nicely, that's going to tie in nicely to what I've been talking about for a long time now, at least the last 3-4 months, is that the first 2-ish months of next year are going to be the best times to capitalize on appreciation, to capitalize on a growing market. I think a lot of the appreciation that happens next year is going to take effect in the first 60 days of 2020. Mark my words, that's how it's gonna be. And then the springtime's gonna roll around, we're gonna have a surge in inventory, and while demand might certainly be there to absorb it, it's not going to be it's not going to be what it was in 2018, 2017, 2016. The market's just not there right now, right? The market's just not there. The only way that we're going to be able to experience a multiple offer market like we're accustomed to seeing here in Silicon Valley is with suppressed inventory levels. And the only time that I predict inventory levels will be suppressed next year is in the first 60 days or so of 2020, maybe a little bit more. But I think if you're buying after if you're selling after the end of February, putting your home on the market after the end of February, it might be too late to capitalize on that appreciation schedule. Now, however, you still might get a very great price. You might set a record in comparison to what happened in February, but in terms of selling homes quickly, of being in control, of having a say in the terms and the price that the buyer offers, because there's multiple offers on the table and you're able to negotiate a lot of terms that sellers are used to negotiating during a multiple offer market, and certainly don't have that kind of leverage when there's only one buyer at the table. Those are the sorts of things that you might see less of come spring market, which is rare, right? Because we're used to a very active spring market, and this year was a rude awakening to a lot of sellers that were expecting to set records and get hundreds and hundreds of $1,000s over what they listed it for. You saw a lot of homes come off the market. You saw a lot of homes expire. You saw a lot of homes, cancel. And I don't expect that to be the case this year. I think you're going to see a lot less of that this spring market because expectations have been tempered. And anyone that's especially watching these videos is going to be clued in on that fact. However, if you're looking to sell your home quickly and for the highest possible price, my suggestion would be for 60 days of 2020. And of course, that could change if I see the stats indicating something different. If I see the data indicating something different, I will absolutely let all of you know what the data is indicating to me at that time. But at this point, I don't see any reason why that won't be the case. That being said, we don't have any heat maps today, folks. So not much to discuss there on the heat map front, but those will come back sooner rather than later. All I have to say is this, is that if you've been watching these videos all year long, which I know some of you have, and really, it means a lot. Thank you for the support. This is actually the first year in, hey Robert, this is actually, that's my manager. Hey Robert, bye Robert. This is actually the first full year that I've been filming a weekly market snapshot. I've done them sporadically before, but this is the first time that I've done it weekly. And while they may be repetitive in nature week over week, I think if you look at it from a month-to-month standpoint, you see things change, right? But that being said, I do think it's important to keep up to date week to week. So I'm really excited. My vision is 2020 for next year, and I'm really excited to keep doing this and actually bring all of you more value as well. So you will be seeing market snapshots. You will be seeing relevant information for certain areas, and we're going to go in depth. We're going to really delve into the data for certain markets that my team really specializes in. You'll still get the weekly snapshot, but you'll also be getting some more in-depth coverage for specific areas here in the Silicon Valley. And that's really all I have for all of you today. I know we didn't really have that much data, but if you see, I mean, the truth is that we're winding down for the year. And the data is trending favorably right now for home sellers. If that data indicates something differently over the next 15 to 30 days, absolutely, you guys are going to be the first ones to know about it because you're smart enough to be subscribed to the Silicon Valley Snapshot. This is Danny Gould with the Gould team, selling Silicon Valley, and I will catch all of you in the next video.